Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. Welcome, JT, and welcome, viewers.
And welcome everybody. Yeah, thanks for tuning in. Basically,
Tuning in. A little bit of it, as you can probably see with the front title page. Well, for those of you who are listening, you can't. We're gonna based on user feedback, we're gonna do a little bit more in-depth stuff rather than just the really quick weekly updates. People have generally come and there's been a few comments on Spotify, Apple Podcasts, and YouTube and things about people liking the deep dives a little bit more. So we're just going to do a touch more of that. We'll still flick through the market wrap ups for the week and things like that. We're just going to focus a little bit more on those deep dives, which there's not a rabbit hole that I haven't loved jumping down.
Mm-hmm.
But yeah, this week, EP96 is entitled, is OpenAI the poster child of AI, or is it the poster child of the AI bubble? So, and it really does come around. Like, there's an article by HSBC this week where they, and the irony is not lost on me that one of the highest rated large language models for mathematics couldn't even do the maths on their own business model. And essentially what it shows you is that,
Can I just ask though? Did a competing LLM do the maths for chat? Like, is that what
knows? I think it's an assumption based issue essentially. Mm-hmm. There's two competing theories, and this is like one of the bullet points here. That AI and the $7 trillion dreams of AI and the AGI hype, that's where the market sits right now. Mm-hmm. What it's sort of saying is that market number two is deals that have to deal with power bills and actual customer uptake. So
you mean the physical and real world, basically.
Yeah, so it's that age-old Wall Street versus Main Street sort of thing, where one's the real world and one is analysts just making. We even had our we actually had our NPC Markets shareholder meeting this week, and we were doing some total addressable market on Mosaic, our new software product and things, and Kai and I were laughing and we actually made the joke in our shareholder meeting. TAM is kind of something it's definitely way more guidance than it is fact. So
did you go the Pro Medicus route and say it's the whole world? Basically, that's the TAM.
No, we went the other end of the scale, and we're more Main Street guys than Wall Street guys. I forgot about that Pro Medicus quote. That cracked me up. It's like your total addressable market is everyone.
Yeah.
But this article was really, look, they budgeted it out. It was a Financial Times article with HSBC involved. And look, it's a couple of $100 billion problem. And that's what they reckon their shortfall is going to be, according to their analysts. But that is even assuming Sam Altman's upside extreme growth forecast.
Yeah.
So even if they hit his big targets, they're still going to have a teeth. And look, the way he talks about money is like 207 billion wouldn't be a problem to him because he's talking about burning billions of dollars. He doesn't care. It's a that's not the sort of thing you want to hear from your CEO. But considering the fact he stole the software anyway from everyone,
and
don't
don't
really
forget
trust him anyway.
Yeah, and don't forget he had that recent interview where it was on a podcast. So someone actually just asked him, "So Sam's like, how are you going to pay for this?" And straight away he just kept fired back, going, "Well, look, listen, if you want to sell your shares, I'll find you a buyer." And he just went, "Okay, fair enough. That's your
look, he probably would. He probably would find a buyer.
He'll find a buyer for the shares, but the question was, how are you going to fund all of this expansion?
I get it.
And okay, so fair enough. He'll find a buyer for the shares. Okay, but that's a legitimate question. So you run a company, Mark, and I just say, so Mark, you want to build a $7 trillion data center? How are you going to pay for that? That's a normal question.
and I in turn say, don't ask me questions,
Yeah.
or just so yeah. I mean, there's probably a much ruder way of but look, basically their commitments. He's gone like he's locked himself into a 1 to 1.8 trillion in infrastructure,
Oh God.
which creates a $600 billion annual rent bill. He's just not factoring that in. And I don't know about you, but like, generally people were pretty firm on getting their rent. Landlords are pretty hard on that sort of stuff. And this is where it goes wrong, because maybe the maths isn't wrong, but when you're doing forward projections, you're doing assumptions, right? So, and he's going basically, AI, the cost will drop 100 times every 18 to 24 months. And what we're actually seeing is that the costs are actually expanding, not collapsing.
Exactly. Yeah.
So, and no one, to that fourth point there, the monetization mirage, outside of the hyperscalers, and because they're such an enormous part of the indexes and an enormous weighting, no one's really paying for it. And and look, and they will pay for it. Don't get me wrong. Like, I mean, we pay for it, but I've got to say, it's probably 1% of our overall costs. I mean, we pay for premium versions of 3 or 4 large language models.
Yeah.
And it's not beyond $100 a month.
Mm-hmm. Well, that's the thing. I was actually chatting to Kyle about this last week. Is that, like, I think the main problem that I see from our perspective is enjoy cheap AI while it's there. Because it'll be like, so at the moment, HubSpot is quite expensive, but I remembered when that was like, under $20 a month per user. And that's when interest rates were really, really low. And what that meant was that there were all these startups building all these great products, and they didn't have to worry about actually making any money. And then obviously once the Fed started raising rates, they're like, hang on, I can get 3-4% on my money. Why am I giving it to you for nothing? And you're not delivering any growth. And then that's when those software companies had to actually start charging real prices for their software. So as an example,
it's kind of akin to a drug dealer. Your first couple free, like
exactly. So, that's what's happened is that, and I'll go into it in a bit, but basically they've given us, the tasters. We've gotten the taste, and now we're used to it, and we're like, give us some more of that, that cheap software. But they're like, no, it's $100 a month, and that's my fear is that AI, $20 a month for an amazing tool. And then they'll be like, hang on, we actually need to make some money now. $100 a month, 150 or whatever it is. And I think in that case, and look, this is a bit of a segue, is that this is where Anthropic is doing exceedingly well versus what OpenAI is promising. So you've got
and their margin control and everything, they're behind on revenue generation, but all of their other metrics are a lot better.
Yeah,
like their margin, everything. Like there was a fairly deep comparison that I came across when I was researching this article. And Anthropic is just all it is 6 months behind, but it's monetizing insanely better.
Yeah, and all they're doing is they're just targeting different markets. So OpenAI, they just want the data so they're offering users coming in for $20 a month, which is what they're doing. Anthropic have pivoted or sort of chosen a different business model where they're targeting enterprises. They're offering sort of private large language models using your own data. It's all siloed, and what that means is that those enterprises value their privacy obviously and their IP. And they're willing to pay for that, and that's the two different models at the moment, and that's where OpenAI and, as you said, Sam Altman being the poster child, he's like free drinks for everybody, drinks around the house type of thing.
Yeah.
He's just making those promises, and he's just like, hang on, the real world is going to catch up, and we're starting to see. And that's what we're chatting about here, and
Yeah, I mean, and that one of the major points was if OpenAI is so entrenched in all this stuff. And there's rumours floating around that that Oracle's in trouble and asking for a government bailout behind the scenes as well. By the way,
yeah.
if OpenAI can't afford to fund them, basically, like Nvidia has sold a lot less chips, and the entire infrastructure trade could be just a spectacular explosion.
Yeah, it's that.
But you know,
Remember that diagram where yeah, I'm investing in you to invest in me, and then it's coming back
yeah,
in full circle, and I guess that's the problem now is that if one of those sort of links does break in that chain, the whole thing does collapse. So yeah,
yeah,
interesting.
look, go.
Yeah, I was just saying it's just an interesting moment that we're seeing here. That the numbers, while impressive, and the market has bought into that hype, and that's what they're believing at the moment. Yeah, some people are actually just doing a few very simple calculations and seeing that it's not making much sense at the moment.
That diagram is probably responsible for people picking away at the seams, to be honest.
Hmm.
And fair enough. Like it did, whatever gets you motivated. But yeah, but look, because I mean, essentially, you got shot down. Like I remember even, and I'm not comparing this to the GFC or the tech bubble. I think this is a brilliant long term thematic. I think it's just overpriced, and I think that the real world takes longer. But than Wall Street just rushes and goes, "We're going to be here," they start valuing things 10 years down the line when. Like the data centers haven't even built, and even if they do build the data center, they can't bloody power it. So you can't speed up that process.
Hmm.
So you can't. So therefore, you can't go and value companies on those things being open because they're not open. I remember, analysts got shot down super badly in the GFC saying when they brought up, the credit risks, and they got shot, and like even Warren Buffett got hammered for like for not doing for not being involved in the tech bubble, and he was proven to be right in the end.
Hmm.
And like that's where but you just, but if you're going to go on media and get shot down, I mean, what it sort of brings you go, well, what's the point? And speaking out, like no one wants to hear it anyway. So why would I bother? Why would I bother mentioning
Yeah,
anything? So
yeah. Oh,
so yeah,
and just before you move on, I think I might have just mentioned this to Kai as well, but yeah, and we actually talked about it a little bit this morning. So it's just going back to the whole AI thing. Is that just have a think about what the DeepSeek moment did as well. Is that like so China are in the AI race as well, but what they're trying to do is actually just come out with AI that is say 80% as good for a fraction of the cost. And, so they're coming at it from a totally different angle to what the US is doing. So US is doing spend as much money, just get the best technology out there, and we're going to charge a premium for that. Versus what China's doing, which is, we'll have these cheap large language models. I mean, like I've heard great things about Barber's Quen model, how it is just so much more cheaper and so much more efficient on resources and costs. And so as a consumer, if we're not going to be paying $100 a month for our premium Chat GPT and just using free models, this whole thing just falls apart. And I've actually listened to a few podcasts where they actually think that is done by design. Actually, China is doing that by design because if they come in with and which is what they do, which is what they're good at, is come in with more volume and doing it for a lot cheaper than everyone else in the world to get their market share. It is one way to really, really hurt pretty much the whole AI trade
well,
in the US.
not
So
not not everyone needs to drive a Ferrari.
yeah,
99% of the population's pretty happy driving a what's that stupid, the Wang Wang or whatever it is, or the BYD, like
yeah, yeah.
it
Well, but
it's
look,
yeah,
and not
so
just
we
that, but
just don't need to do that.
yeah, but just have a think about how we use AI as well. Like, don't get me wrong, like we love AI, but and this could be just me personally. I feel like I'm definitely not using as much of its capability as well, and I think I'm fine with that. So, when I'm formatting our weekend, to be 170 words, or I'm, getting a few articles rewritten, or just doing some very simple research. These current models are more than sufficient for what I need. Do I need the newest models that compute or program just a little bit better? So it'll be interesting to see how this battle plays out. Because obviously, as you said, Sam Altman is the poster child. I'm going to go with he's the poster child of the AI bubble. I mean, you had Nvidia as the poster child of the.
Listen here. I retracted that very long ago.
No,
look, it still could be. I mean, I doubt it.
You made that statement, so I'm just saying that I think that Sam Altman, as you said, is he the poster child of AI or the AI bubble? And I'm going.
Well, he's easy to hate too.
Yeah.
So I agree with you. And I think he's doing all of the irresponsible things you don't want to hear.
Yeah.
As a company owner, I mean, mate, if he wants $1 trillion IPO valuation, he better move fast, because I reckon this thing's falling apart a bit at the seams.
Mm-hmm.
And let's face it, Microsoft, like I always said that Microsoft basically forewent their shares if he got to AGI, which was that's just them going, you're never going to get to AGI, because they don't give away anything, Microsoft. And I sort of saw that as a bit of a lack of faith, to be honest. But everyone's starting to catch up. The Chinese will catch up, and then they'll just slot someone else in, and he may end up being the casualty. I think if we want to go down the cliched path, if he gets time man of the year at some stage, that's usually a good sign that he's full of fraud or whatever.
Yeah.
But yeah, look, I mean, just looking at the equity indexes, I mean, we've had a big bounce back in the US this week on the back of rate cut hopes, and it is definite hopium. Basically, on Monday we had the Fed Williams say that he thought, he was dovish basically, and he's normally dovish. He's normally pro rate cuts, and essentially what's happened here is that because it's Thanksgiving week and earnings is over, and there's no news cycle because nothing's happening, every single day that news story is being recycled, and it's just become this self-fulfilling prophecy. And now we're at 85% chance of a rate cut, and nothing's changed. Absolutely, we haven't got any economic numbers. Six Fed members said last week that, or the previous week, that we're not getting a rate cut in December. One guy said it, and on the Monday, slow news week. And this is the downside of AI, is it encourages everyone to copy each other's homework.
Mm-hmm.
There was and I sort of covered it this week, but it's the turkey trap. And when you go back and have a look at this, and to the downside and to the upside, this isn't just a bullish or bearish thing. There are great examples in the last 20 or 30 years of head fake moves. Over the Thanksgiving period, because volumes are off nearly 50% on a 10-day average, and there's, like I said, there's been a slow news week, and it's like every morning I wake up, I flick on my I turn my phone on, I have a look at a couple of the newswire sites, and it was the same Williams article being recycled every day, and it just been going back up again. So Nvidia's been a little bit soft because of this, when we're going to get to this in a minute. But that's why the Russell's up 8%, because that's the most interest rate sensitive end of the market. I think what we're doing is potentially, because the Fed meeting's on the 9th and 10th, I believe, so we'll get that on the 11th here. I think we're really lining ourselves up for a potential, they're now pricing an 83% chance and a nearly 10% rally in the small caps. I mean, I just kind of think it's if we get it, we're pricing in getting it, right? But what it means now is that if we don't get it, and the general consensus is that from the Fed members that have spoken, that it's probably not going to happen. We're not even going to get payrolls numbers before then. Why would they do it? You don't understand why they would do it. They're not going to get the PCE data until the 5th either. That basically we've got to give all that back, essentially.
Yeah, absolutely.
And that scares me now. This is there's
I think
hallmarks of that last gas push.
yeah, exactly. And I think it's just amazing that the market has selective hearing. So as you said, yeah,
It's getting worse. I've got to
yeah,
say, it really is getting worse. And again, that's the age of AI. That's the downside of AI as well. Like it,
hmm
and then it spirals the other way really quickly. So I mean, Google's the same. We've talked about this at length. Like, you can always find the Kool-Aid you want to drink because of the internet, and
yeah,
it's just been amplified by AI. And we always used to make the traders when I had my trading firm. The exercise was you actually had to go to Google and ask the opposite of your of your thesis, because when you inherently always have a cognitive bias to ask a question where why am I right as opposed to why am I wrong.
hmm
And I think AI is just amplifying that quite a lot. I mean, ASX was up and down and around and God knows what. Got the market map here. WiseTech's is a really good performer this week. They finally got an
is
app.
that week to date or
No,
is
no,
that
that's this morning. So it's gone
this
another
morning?
5 or 6% today
Yeah.
as well. So up about 14%. But they finally got an adult in the room. They got a female non-executive director. And I heard Adam Dawes from Shaw's say on Ausbiz the other day, he goes, never seen a non-executive director move a market like this. But the boys club, the boy, it's like they've been living in it. WiseTech's been run in a boys' tree house, and Mum's finally come up through the gap in the floor and gone, "Oi, what are you up to?" And shareholders are pretty happy with it. And look, on the back of it, we recommended it as well. We recommended it the day before. Didn't obviously know that was coming, but we very much rushed to buy more at that point. And because that's what the company needed. Those guys need someone to keep them in line. That board particularly, and a 36. There's very few 36, $38 billion or $30 to $38 billion companies in the world that are run like a schoolyard club.
Oh, and you said that and hasn't a 70-year-old as a head of innovation.
It's like saying he's a very wise 4-year-old. It doesn't really work. But I mean, look, a little bit of a push up in the resources sector. James Hardie had a decent run up. And announced a few things. I think it was removed from an index, and apparently there was some short selling covering. And Ramsay Healthcare as well, up 16% on the week. For long-suffering Ramsay Healthcare shareholders, I mean, you're pretty happy with that. It's probably It's probably better than the best yearly move in Ramsay to the upside in recent times.
Oh yeah.
But they upgraded. So, and that is the first time poor old Ramsay shareholders have heard that as well for a long time. So, but overall relatively quiet. I think ResMed gave an update this week as well, which is pretty positive. And now US as well. Nvidia was really soft on the back of, as you can see here, Broadcom and Google. So we're going to get to this topic next, is the TPUs versus the GPUs. And essentially the tensor processing units versus the GPUs. GPUs are very all-purpose. TPUs are very specific purpose. But they're about a fifth of the cost, and they're about infinitely less power usage as well. And Google has done a deal with Meta to supply those TPUs, but and then obviously that affects ongoing demand for GPUs with Nvidia. And the reason Broadcom's up is because they do a lot of Google's chips and things like that as well. So and then other areas were just the healthcare sector was pretty positive this week. But apart from that, it's been relatively quiet. I've got to say.
I think Oracle's the scary one, isn't it? Like that's
Oracle's the scary one. Yeah.
If you bring up the chart, that looks horrible because like obviously we had that massive jump where Larry Ellison was the richest man in the world for a little bit, just on the back of that valuation.
Strangely enough, he did that almost exactly the same in 2001.
Mm-hmm.
He was like richest man in the world for like 3 weeks, and then it went whack. Like so, it's a bit of deja vu there.
Yeah, could be a sign. Yeah.
Well, hopefully not. I mean, not that you'd see the surprise on his face. It looks like he's had more Botox than the Desperate Housewives of Atlanta. But anyway, but yeah, it's been a relative. I think John Deere had some earnings this week. But look, I mean, nothing to write home about. I would dismiss the TPU versus GPU argument. I kind of get, and we're about to cover that. Oracle, we might have a bit of a dig into that, but they're only rumours at the moment. I was kind of inclined to put it in, but then I don't really like fueling rumours either. But there's a lot of debt issuance going on. Their debt to equity ratio is something like 400 or 500%. And infrastructure builds, it's not uncommon to get 200%, but like 400 or 500 obviously is mildly concerning if the revenue doesn't arrive. But I'm sort of writing this off in terms of this week off in terms of like not low volume weeks like this. I don't really take into account for price action. So yeah, and here we are here. Well, I sort of already explained it. So Nvidia is more your Swiss Army knife, whereas the Google Cloud, the TPU stuff is really, specific knives for specific purposes, separately. So it's the best analogy I could come up with. It's not a great one, I've got to say, but it, it's Kai.
Yeah, so this is a
probably
bit of
the best person to explain it.
I guess my question is. So is every neural network sort of built the same way in terms of how they do their calculations? So I'm just curious how a TPU, let's just say a different model comes out, would TPUs still be able to adapt? So I guess that's my sort of question for it, and not that I have an answer for it either. But
no, you definitely asked that question with the wrong people in the podcast. So we might Kai's written it, and you should go and have a look in our education section.
Yeah,
Kai's written a couple of really great articles where he breaks it down. The poor bloke, basically, he's got to explain it to me. So therefore, by the time we break it down, and then I'm like, less complicated. I've got to explain this to our clients. Can be 80 years old.
Because I guess what I'm asking is, so if you look at Nvidia, so what they had was, computer games need better graphics. That's where they built the GPU, and then they go, hang on, this actually works for Bitcoin mining as well, and then hang on, it's actually good for AI. So I'm just curious on how the structure is different on a TPU, and how can it be adapted? Because maybe there's another use case that people haven't thought about for a TPU, and that could send the designers in a whole different route. So
I mean, either way, Taiwan Semiconductors is sitting on the sideline just rubbing its hands together, going, because it doesn't give a crap. It's just like, you want to? Why not do both?
Exactly. They're going to back the up. They don't care who wins. They'll benefit.
Mate, and look, we'll just skip through this a little bit, but there's just been more of a lack of news stories this week.
Only 15 billion.
No, that was just one of the things they announced.
It's not 15
65 billion. No, 65 billion was announced in the last week or so. So 15 billion in a new data center in Indiana, and then 50 billion for high security AI supercomputing hub. But to put it into context, I think that brings their capex up to 130 billion. So they announced half, pretty much in the last week. So, and what it's really doing is, which brings me to this, been a lot of debt issued, a lot of bonds. And
we're talking
Amazon.
We're talking about guys with great balance sheets as well.
Well, I suppose
so. Except for Oracle, but I thought the Mag 7 was sitting on so much cash. Yeah.
Well, they are, but I mean, I suppose, I guess it's the arb, isn't it? People are only receiving probably 6 to 8% tops on these things, and they're going to probably make 30% out of them or something.
Uh,
Why would you use cash?
yeah.
But yeah, I mean, as you can see, disciplined here from Amazon. It's only debt outstanding, 69 billion for a company of that size is nothing. But look at this one here as well. Like that's 25 billion. Their debt out. That's half their debt essentially. And then Meta was up to 30 billion. That's half their debt. I mean, Amazon can pretty much cover it by the looks of things. But it is interesting that they're starting to tap the debt market. So and I just but there was just a lot of them. A lot of them announced this week, and I pulled it into a table, and it's the benefit of AI, and it's nothing to be concerned about. Like I'm not, this is not a, but it was just interesting that they, like I said, their first bond sale in 3 years, and then largest offering to date and things like that. There was just some, and then this was multi-currency as well. Like they're it's interesting that they are starting to tap debt markets for the first time in a while. So yeah, but overall, there's just a lot going on behind the scenes, and there's a lot more focus on, the maths of AI, not just the theme of AI. So I mean, we're just obviously watching it a little bit closer, because I think these companies are going to be taken into account a little bit more harshly in coming earnings. And there was another thing as well, like there's a lot of contradictory stuff around Nvidia's earnings. Their inventory's blowing. Their inventory has doubled in the last 2 quarters or something like that. But yet they're saying, you got to look at what Jensen says. He never uses numbers when he talks about demand. He just goes, it's insane or it's sky high. But their inventories are building. And no one's paying. They've got $56 billion worth of unpaid debt sitting on their balance sheet, and for chips. So, and then I think that's
which they probably already marked as completed sales as well. So yeah,
they have. And the way they've done it is that they basically just let OpenAI off and traded it for equity in the business. Of a business that's not floated. So. And that's pretty imaginary revenue. But again, 12 months ago, no one even bothered to dig that deep.
Because it was the future,
yeah, exactly. US dollar was weak. It's the weakest week for the US dollar in quite some time, and no surprise that the commodities are up.
Really, I mean, like the US dollar was weak, but it was still hovering around that 99 sort of area. So yeah, like it is a little bit.
I mean, when I say quite some time, I'm like last few months. Like, I'm not talking for the year, because we got belted. So my view on the US dollar, but silver's had a great week, and platinum.
Yeah, I was going to let you sing the swan song on silver, because that looks like it's going to break out to new highs. Whereas gold's still got a couple $100 to go to that 4,400.
It's always the bridesmaid. When the market's pumping, platinum beats it, and when there's safe haven demand, gold beats it. It's like it literally is the bridesmaid that's missed out on grabbing the bouquet like 6 times. Well,
Yeah, and
it's plugging away. It's going well.
Yeah, exactly. Oh, and one thing I want to add, coal. So that's actually dropped. So China production numbers, or I forget the actual figure, but it was like the worst print that they've had in 40 years.
Oh.
Yeah, exactly. So it was actual, I forget the phrase, but so with China, if you look at their general economy, okay, so if you look at the Western economy, consumption is somewhere, call it say 3/4 of the GDP. In China, it's only half, because they invest so much more into their own factories and to produce goods for the rest of the world, because they are the world's factory. That investment into their own factories has actually dropped and hasn't actually dropped in 40 years. So a lot of people were alarmed by that number, and that's why I picked it up when I saw the coal pricing drop there. And I think there was also some talk about BHP and some iron ore forward contracts where China were saying don't buy some of their steel or iron ore products as well. So interesting times again. So while I do talk about you know the USA versus China race that a lot of people are underestimating China. We are starting to see some cracks in the wall. So be interesting to see how things progress from here.
Yeah, I mean, it's like they said they're going to stimulate to get 5% GDP growth, but they're doing it in a smart way. They're not just turning on the fire hose.
Mm-hmm.
So, I mean, because they've gone and helped, they've gone and helped. So instead of like in the States, like every state is nearly broke or is about to be broke or whatever. But that's their problem. Federal government's like, screw you, you're on your own. Whereas China used their balance sheet to help all of the regional governments refinance. So, that's a smart thing to do. But it's not like, it's not the most interesting news. It's not like QE or, and it's not going to get stock markets excited. It's like, it's almost like the market's really like, pissed off that it's, that a government's being sensible for a change. So like, you don't really hear about it, but I said at the time when the targeted stimulus is just, it's so much better than, I mean, it's hilarious that the Western world, which is, capitalist, has such a ridiculously dumb and blunt tool for monetary policy, where, I would have thought that a capitalist, style economy would be more targeted, not less. But there's one thing I forgot to mention before is Australia, we got a high CPI number this week. And apparently now Australia's hiking rates next year.
Yeah, so they're definitely regretting coming out with monthly numbers now, because that was the first monthly print, and it was higher than expected. So
well, it was all
whose great idea was that?
All electricity prices and homes, and we don't. And let's face it, we don't use either of those things. But yeah, so. But I just love the fact that the media, like we've gone from, we're going to get more rate, how many more rate cuts? A month ago, I was getting asked on Ausbiz and SBS and things, to straight to rate hikes, like bang, like it is I'm an ex-interest rates trader. Just give you a little bit of advice, generally, people. If you've read an article this week where someone has suggested that we're going to hike really quickly next year, just tag that author and never read their garbage again, because that is the dumbest statement I've ever heard in my life.
Yep.
Tale of two markets. Apparently, the US is easing. So, I mean, anyway, probably like I said, it was a good week to do baseline knowledge rather than following the news, because it's just been, the world, when Big Brother goes on Thanksgiving, so does the rest of the world. So,
yep.
But yeah, I think we're largely, we've got fear and greed.
It was 16 last week. It's back to 18 now. So
yeah, I mean, again,
a little bit less fear, but the markets are recovering. But here we are still in extreme fear.
I think you probably dismissed it this week. Kramer of the week is Jim Cramer. I think within a few hours, basically went bearish on Bitcoin, which was the low in this whole move so far. The timing was unbelievable. Like he literally was the same session. He said I'm going to go bearish on Bitcoin. It's good to see Jim back to his normal self. I mean, he's been on fire. He's actually been pretty good this year. If the inverse Kramer ETF existed, they would have been spanked this year, because he's long Nvidia and Palantir. No, back to the world the world's back to being normal again. And because I think it was within about a few hours that he said he's going bearish, and it just went straight up. So
Yeah. Okay. So just before we sign off, Mark, what star bear are you for this week or for next week?
I'm going to go because of that rally this week, which I think is just absolute hogwash.
Mm-hmm.
I reckon we could. I'm a 4-star bear next week. Like I'm not though, and that meaning that I think we can. This rally this week could be taken away in an absolute instant, and I think so, which means that it's a pretty bad week if the Russell drops 10%, but I reckon it can.
Oh yeah, it's and I'm so I haven't looked at the official numbers. I was bearish last week with Kai.
I wasn't. I mean,
Yeah, so
yeah.
I'll have to check that Thursday to Thursday. But I'm on the same boat as
Oh
you.
no, everything was significantly up.
Okay, well
At least 3 or 4.
Okay, well I'll go with a 2-star bear. I think this market feels a little bit dead cat bouncy. Yeah, and just one piece of like AI bubble news again, and you could turn it around. So yeah, either way, that's my call for next week.
Fair enough. We will, and I think I think for the new year, for our 100th episode of the new year, we actually might start tracking that properly.
Yeah.
And because I don't think I've been on for a couple of weeks, but obviously as well, Mosaic's here. All of our premium articles and things like the OpenAI article and stuff like that is all available on the website on Mosaic. You can sign up for a free trial of the recommendations as well, but there is also you can sign up for free and just get our content through the app as well. So go to Mosaic, npcmarkets.com.au and scroll down and follow the prompts. And but I guess we'll talk again next week.
Yeah, absolutely. And thanks for listening in.
Cheers. Thank you. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.